Welcome back to Power Breakfast. Now, the two-day MPC meet kicked off on August 5th and the decision will be announced today. But now the key question is that as the growth slowdown concerns loom, will the Monetary Policy Committee cut the repo rate for a fourth time in a row? Latha Venkatesh now joins in with her take.
Well, it's very clear now that in the next 4 hours you are going to get a rate cut of 25 basis. The CNBC TV 18 widespread poll of 20 economists said yes, and our Citizens Monetary Policy Committee unanimously voted for a 25 bips cut and a dovish stance. That's already there. It's an accommodative stance. The question is whether they will give very overt comfort on liquidity. Chances are they will. The market is more looking for that. Now, there is a liquidity framework committee that has been appointed. It was under Viral Acharya. He has resigned, so that report hasn't yet been made public. If they are able to, justify that there will be abundant liquidity in a rate cutting cycle through that report, then the market will be extremely happy. But we don't know whether that committee report will be submitted and what it will say. But the point is the market is looking for some assurance that there will be durable liquidity for a sustained period of time. How the RBI gives that message, we will have to wait and see. So that's the base assumption with which the market's going. What more can come? It can be a 35 or a 50 basis. The governor had mooted the idea, why are we sticking to 25, 50, 75? Why not in between? So 35 could be an idea. But, there can be a section of the market which therefore thinks that, so the RBI doesn't think 50 is good, 50 basis is deserved. So it can have negative repercussions also. It's a new idea. I don't know whether they will experiment with it. If they give 50 basis, that will be good for the market. It will definitely move yields lower. But the worry will be then how much more is left. And, markets are always responding to tomorrow rather than to today. So, there are these things. The market's base case is 25. If that comes, then don't expect the 10-year yields to go much lower. It's around 6.3, 6.32. It'll remain there. At the most, it can go to 6.25 because it has already factored in that cut. Now, if you wanted to go to 6.2 or 6.1, it will have to be 50 basis. But a very dovish stance would help. The most important dovish stance would be if they cut the GDP forecast. The GDP forecast was already brought down last time from 7.2 to 7 for the current year. Now, a further cut, it takes a lot. You're in a way also compromising the government's position when you say that growth is not visible. But they may want to do it. They may make it 6.9 or give a negative bias to their growth. That will be seen as very dovish, which means they want to help growth in subsequent policies also. So really you have to watch out for several signals.
Okay, all right, Latha. Thanks so much for that. Well, on that note, let's also listen in to what CNBC TV 18's Citizen Monetary Policy Committee is expecting.
Transmission in the broader sense of the word clearly is necessary going forward. And I think particularly in the context that banks have started to tighten lending standards for specific sectors, and given the crisis of confidence, clearly the risk premium is higher. So we need to go that extra step to ensure that transmission happens. The question is, how do we ensure the transmission happens?
The stance is already accommodative. What kind of, non-rate signals are you expecting from the Reserve Bank? Should they give an indication that they are not done with rate cuts? Generally, what is your expectation anyway in terms of the number of cuts?
So as we know, central banks rarely would give you a clear signal on what's the next move that's going to be. But in markets, our job is to really get into the micro statements and figure out what's going on. I think the things that I'll be looking for is whether the central bank is talking about lagged impact of monetary policy, especially if they cut 25 basis point in this policy, then it's about a 100 basis point cumulative cut. So the lagged impact of that's something which you'll look at. The second is that we know that in a kind of global comparison, our real interest rates are quite high. So are they going to talk about that fact, which is going to be a signal that things could be deeper than what the market is anticipating currently.
Are you also with Sonal that growth may be closer to 6.5? And do you think there is a lot of elbow room left in terms of rate cuts?
I think See, the RBI, the central bank, if you're a central banker, I think they are now caught in a dilemma, because the point is also in the Indian context is transmission. Because transmission has always been the big challenge given the operational issues with the banks face. So from that point of view, the central bank first has to ensure that this cuts the rates, and at the same point of time it ensures that the transmission, which has now just started to be a little more aggressive, may actually gain pace. The second point is that given the growth conundrums and given the growth considerations, the central bank could also give a clear signal that we would like to keep the liquidity in surplus mode for an extended period of time. But I would also like the central bank to make a distinction, because the market often confuses what is in banking liquidity and what is in market liquidity. Basically, the market liquidity and why these, for example, the problems with the NBFC is that they don't get the credit because of the credit risk, and that is entirely different from the banking system liquidity, which is in surplus mode. So that distinction I want the central bank to make. And regarding your specific question of whether rate cuts, I think yes, there are possibility of further rate cuts. Maybe there could be another, 25, maybe it could be larger than that, but it will also crucially depend on what type of data we get. As of now, the inflation numbers and the growth numbers suggest that the quantum of rate cut could be in multiples of 25 rather than being only 25.
Okay. All right. Sajid, will they be bold enough, or should they be bold enough to indicate that there will be more rate cuts?
Well, I think, Latha, frankly, just given the quantum of uncertainty around the world and given how fluid economic events are both globally and domestically, who would have thought 6 months ago the Fed would be cutting and possibly cutting multiple times in 2019? Who would have thought that? That I don't think any central bank would want to foreclose any option going forward, and therefore there's this greater emphasis on data dependence. I think one strategy that's worked very well for the RBI is, the mandate is to look 1 year ahead, look at where inflation is. If inflation is below 4%, then you can then look at where output gaps are. And I think that fundamental approach will not change. Therefore, what I would look at is what is the risk bias to their inflation forecast 1 year from now. If the risk bias is lower or those forecasts are lower, that would tell me that perhaps more space for easing would opening up. Secondly, the MPC has brought its GDP forecast down to 7%. We think that's going to take really a lot to get to. Our own forecast is 6.5. So if the MPC were to reduce its growth forecast, already in July, less than 6 months into the year, that would also be another indication of their concerns on growth. So I would look at some of these intangibles, where their growth forecast is and where their inflation forecast is.
Okay, Dr. Sen, so that is the picture. Sonal saying that liquidity comfort should be given to the system, and in fact, as Soumya puts it, people are expecting GDP to be closer to 6.5, something you agreed to. So what do you think? Do you think just a rate action is enough? Should the rate action be more than just 25 in the months to come? And what more? What more? Liquidity? What other kind of comfort?
Well, Latha, how should I put it? One of the things that I think we are not taking on board is the fact that over the last 3 months, the 10-year bond rate has crashed.
Yes.
So there is now virtually no difference between the 10-year bond rate and the repo rate. Now, this is insupportable. Because if this continues, you're going to get into a situation where the yield curve is going to reverse, and that's not good news for anybody.
Dr. Sen,
now,
Dr. Sen, may I intervene?
In a situation...
Dr. Sen,
sure.
The repo rate is at 5.75. The 10-year is at 6.25. It went to 6.25, now 6.3.
6.2, yeah.
So that is a 50 basis spread.
It's real. That is much too small. That should be at least 175 to 200 basis points.
All right, that was the Citizens Monetary Policy Committee. They are unanimously expecting a 25 basis point cut today by the RBI. But shifting focus to some earnings that were posted yesterday then, Indiabulls Housing will be in focus today on the back of their Q1 numbers. The company has reported a decline in loan growth for the second time in a row, and asset quality has also deteriorated this time around. Abhishek is now here to take us through the numbers. Abhishek, it's not looking like a good set.
It was factored into the stock price. Everyone knew that the result would be weak. Indiabulls Housing reports a decline in AUM, both YOY and quarter-on-quarter for second time in a row due to the stress in the balance sheet. So AUM is down about 10.5% YOY and about 6% sequentially. Even their on-balance sheet AUM is down about 23% YOY and 6.5% quarter-on-quarter. They have been doing securitization, which means that they have been selling their book to creditors, which is lenders, and that is up about 95% YOY, but it is down about 5% sequentially. The asset quality perhaps the worst from the company in last 4 years. The gross NPA in absolute value increased by more than 56%, and as a ratio it is still at a comfortable level of less than 1.5%. The operating profit was down about 21% sequentially. The spreads have also declined to multi-quarter low of 3.14%, but remains under the guidance of the management between 3 to 325 basis point. On the positive side, the company is still strongly capitalized at 27.8%, and valuations as per analysts are attractive. In a note to analysts, the company did mention that they expect to hear from RBI in next 30 to 45 days with respect to merger with Lakshmi Vilas Bank. Back to you.
Okay, all right, Abhishek, thanks so much for that. Well, Mahindra will be reporting its numbers later today. Sonia is with us to run us through the key expectations. Hi, Sonia. Good morning.
Hi, good morning. Thanks for that. Well, the stock has been under pressure this year. It's down about 30% in 2019. It is trading close to its 52-week low as well. This time, the results are expected to be weak. There's a double whammy for M&M. On one hand, the UV sales have been under a lot of pressure. In fact, utility vehicle volumes were down almost 6% year on year. On the other hand, because of the delayed monsoons, the tractor volumes have fallen 15% year on year. And tractors are a high margin business. Because the volumes are under so much pressure and there's a lower number of tractors sold, the blended margins will also be under pressure. Now remember, the tractor margins have been down for 3 consecutive quarters, and this quarter as well, there's an expectation that the weakness will continue. The blended margins are expected to fall to 14.2% versus 15.8% earlier, and on the profitability front, we're expecting a fall of 18%. Now, more importantly, we'll watch for whether the management scales down their guidance further. Remember, they brought down the tractor full-year growth guidance to 5% for FY20. Dr. Pawan Goenka has said that for the auto sector, he will wait till the month of September and October to see if there is a concrete pickup in auto sales before taking a call on the guidance. So any commentary around that will be watched for very closely. But on the numbers front, the expectations are that things will be weak again.
All right, Sonia, thanks a lot for running us through all of those estimates. Well, let's get back to the top story then. Former External Affairs Minister and one of India's top statesmen, Sushma Swaraj, has passed away at the age of 67 following a cardiac arrest. My colleague Runjun Sharma from CNN News 18 joins in from outside of Sushma Swaraj's residence now. Let's go across to her. Runjun, over to you.
Since the morning, we've seen Mayawati and Rama Devi come here at the residence of Sushma Swaraj. In fact, this entire area around here has been barricaded because we're expecting more politicians to come in and pay tribute to Sushma Swaraj. Around noon is when Sushma Swaraj's body would be taken to the Bharatiya Janata Party headquarters, where her mortal remains would be kept. And of course, more people are expected to come in and pay tribute to her. Around 3 is when her body will be taken for cremation at the Lodi Road. Now, we do understand that last night around 9:30 is when Sushma Swaraj was brought to All India Institute of Medical Sciences. What we've learned from the doctors is that she was brought dead. She was, of course, straight away run to the emergency ward, and she was. There were a few attempts in giving her CPR, but of course, she couldn't be recovered. But having said that, Sushma Swaraj was mostly keeping well, except for a few spells of hospitalization. She was mostly keeping well, and it was in 2016 when Sushma Swaraj had a kidney transplant. In fact, I remember Sushma Swaraj also tweeting about her kidney failure, and after which it was overwhelming to see how people, they in fact, reached out to her, offered to donate her kidney to her. So, you know, that's who Sushma Swaraj is, deeply loved and revered by one and all. And of course, we've seen responses pour in from the Prime Minister to the President and also to those in the opposition, expressing their grief and, of course, shock about hearing about Sushma Swaraj.
Okay, all right. Thanks so much for joining in and giving us, that update. The nation mourns a tall leader, Sushma Swaraj.